Good day. Thanks for joining me. My name is Chad Carnes and I'm the Chief Market Strategist at ETFguide.com. Today I'm going to look at the Vix Indicator in a way that you can change the indicator to help you spot higher probability trading opportunities. The Vix Indicator is one of the tools used to gauge fear. By measuring the implied volatility of the S&P 500 index options, the Vix tells us the market's expected volatility over the next 30 days. When the VIX rises, expected volatility of the S&P 500 index also rises, and when the VIX falls, expected volatility of the index is also falling. The VIX typically performs opposite of the S&P 500, bottoming when the markets are topping and topping when the markets are bottoming, since increased volatility is typically associated with downside moves. This is shown in my first chart on the screen, which is a typical long-term chart of the VIX compared to the S&P 500. Notice that in red, the VIX typically spikes as the S&P 500 in black is bottoming. A huge spike in the VIX occurred in 2008. Another one occurred with the 20% sell-off in 2010, as well as 2011. And then we've had a couple of smaller spikes since then as the market has found short-term bottoms more recently. But having the VIX and the S&P inversely correlated, which means one goes up and the other basically goes down, it can be confusing and counterintuitive. But luckily there's a cure, and we can look at the VIX differently. One way to analyze negatively correlated assets such as the S&P and the VIX is to invert one of them, which I have done on this chart. To do this, we simply make the VIX a fraction and plot it alongside the market. This next chart was originally provided to our ETF Technical Forecast subscribers on February 24th, 2013, and I've now updated it through today, July 15th, 2013. The chart now allows the VIX to move in the same direction as the S&P to better compare them apples to apples. And what I've done is I've taken the inverse of the VIX in black and plotted it alongside the S&P in red, and you can see that typically the S&P is rising along with the VIX, and then the VIX is falling along with the S&P. And this may help you better understand the VIX as it's no longer inversely correlated, but now positively correlated with the S&P 500. Using these techniques along with some other sentiment and technical analysis and indicators we use, it helped us see some great VIX buying opportunities in the past that I've outlined in the chart by the black arrows, as well as highlighted in an article I wrote on February 6th that can be found at etfguide.com when the VIX was below the 13 level and we were telling our subscribers to buy it. Currently shown by the black dash trend line is the flipped chart, and the inverse VIX is not making new highs right here where I'm highlighting on the screen, even though the market is, as is shown by the red here. This is a sign that the VIX is showing relative strength, which is a technical term meaning that the VIX is holding up relatively well compared to where the stock market is. A similar technique here helped us identify in April and in May key times to buy VIX call options and or protect ourselves from a market that was topping, and you can see by these black lines that I've drawn that the same relative strength was occurring in the VIX in April as well as the May highs, which again is occurring today just before the S&P had decent sized pullbacks and the VIX spiked significantly. So just to kind of show you the size of the spikes the VIX can have, this final chart shows the same time frame. So you got the February spike, 40% spike in a few days, a 30% spike in April, and then a 50% spike after about a month in June, showing how quickly the VIX can move when it indeed does change its trend. Now currently I'm watching a key trend line on the VIX at a shorter term basis, and I follow this in our technical forecast to confirm the next high probability buying opportunity for the VIX call options. I would not be buying the call options right now just on the relative strength alone. Typically we want to see some sort of confirmed bottom in the VIX and or a trend change before buying call options here. But the fact that it's showing the relative strength does have it on my radar screen and is a warning sign to me. I will continue to be watching the VIX and the flip to VIX over at etfguide.com for our next high probability trading setup when we get confirmation of a longer term bottom on the VIX and a potential trend change on the S&P. It will again be time to buy call options on volatility to hedge your portfolio from any downside risk. Thanks for joining me today, and please check out some of our other videos on our YouTube channel and Twitter, as well as our many other investment tools and research. Over at etfguide.com, we offer a monthly newsletter, weekly ETF picks, and I also do a few times a week technical forecast. Thanks again. Bye.